Dear ladies and gentlemen, dear traders, welcome. This is episode number 4 of our simple series. We go step by step. We have a lot of new traders and it makes sense to really explain to them all the concepts and aspects and information shown by the market causality. And we do so in a simplified, efficient manner. And we have talked about the down money positions, we have talked about the stops, then we have already talked in the last video about the interaction of those two. And now we're going to go a little bit more into detail. And today in this video we're going to cover the so-called time and range principle. What do I mean with that? Well, the principle states that the smart money algorithms will exploit the factors time and range to the maximum. Okay? There is no need to rush anything. That's very important to understand. That's very counterintuitive to many traders because somehow the human brain assumes that as soon as a target appears and is shown on a chart, that the next step is to trade towards it. However, this is not how the algos operate, and that's why I have defined those principles to help you understand how they actually do it. So why do they exploit those two factors? Why is that so important to them? There are different reasons. Here are some of them. Yeah, new additional money gets lured in. Already trapped traders, so positions which are trapped, often get increased. The dumb money often pulls the stops even closer to the price, to the target zone, gets more dense. Okay, so it's not that the situation gets worse for the smart money algos. It gets better because if the price goes sideways, often traders pull in stops. Correctly placed, the money gets insecure, has to sleep, leaves. So that's important, especially for human traders. If there is an 8-hour sideways market, often they need to sleep. So some of them need to close their positions and so on. And the ones who were actually placed correctly, let's say, because they expected a breakout to the upside, they have to endure a multi-hour range market, so they may in the end not be sticky enough, as we call it, to hang in there for the actual target run. The money traders cannot easily scalp with a good risk-reward ratio. All short-term stops that are close to the price are cleared. That's very important, okay? The so-called Pac-Man dynamic. They just want to take out all the stops which are close to the price. Otherwise, those traders can place trades with a very good risk-reward ratio. And if you have tried to trade with tight stops, you know exactly what that means. You will get taken out most of the time. Eventually, there will be the next news announcement, which can then be used by the smart money to clear the target zone. So either way, the smart money will be in a favorable position because they have price control. So if there is, let's say, some unemployment number coming out, they can conduct their original strategy, they can implement the original plan either way eventually. So how does it look like? Let's look at an example. Yeah, let's say this is a market. We have some dumb money longies here at those price levels. We have some shorties down here. There's also maybe an MTS in the market. Okay, so what's going on? How does the smart money implement the so-called time and range principle? There is no need to do something like this. Okay, boom, to go to the MTS. Why should they do that? Those longies here, they would win. Okay, so they don't let anyone win. Okay, they want to kill traders on all sides of the market, whether they're long or short, whether they try to trade breakouts, reversals, whatever. You understand? This is simple game theory. They won't do that. So what do they do instead? Yeah, they go down, pricing in those dumb money longies. Yeah, they go up, they take those short-term stops here, the STS. And now very important, they go into the range and take those short-term stops, okay? Because guess what? If a trader can buy and place a tight stop and then makes this profit while only having this bit of a downside, okay, this is a good risk-reward ratio. So they don't allow that. Instead, they do the washing machine, okay? They're going for those inner range STS. They take out those inner range STS of the dumb money longies, okay? They clear the range in a non-linear manner, taking those short-term stops, and guess what? Here they do a head fake, here they do a head fake, so that even triggers manual traders and systems who assume, oh, the price came down here, so there will be a breakout, we sell, and they get caught in a head fake. You see? That kind of spaghetti destroys all these traders and systems at the same time. You understand? So the smart money algos are exploiting the range and the time to the maximum. And eventually they're gonna make a move to, let's say, for example, this MTS as a target. Yeah. So let's go through it again. Okay. Let's say the price goes up, it took some of those STS, and it falls back into the range. It takes the slower STS, does a pullback, takes some STS again of some money shorties, then takes this STS, then does some pullback, goes flat, then maybe takes those STS here. There's the money shorties, so they're gonna price them in by doing another pullback here. Okay, then let's say they test this position by nest of the Damani shorties by taking the last STS. Now let's assume the following happens at some point. So then we have suddenly new Damani sellers entering the market thinking, wait a second, this is gonna break out to the downside. Okay. They assume, oh my god, you know, there's gonna be sell activity, the price will go down, so we're gonna sell into the market. What happens in response to that? You guessed it. What's the different color? Oh, boom, okay? The price goes up. They don't want to let these Damani sellers win. And guess what? Do a pullback, and now we have enough Damani sellers in the market. Okay? So they go up. Those longies have been served with a down move. Okay, they've reduced and many left the market because the price went against them. All the SDS have been cleared. And then guess what? Boom. Okay, they go for the actual target run and take out this MTS. You see? So do you understand what I have said before? By doing these kind of games, okay, and by creating this kind of range, they are implementing several things at the same time, okay? So those longies who were placed correctly, they get served with a down move, okay? Those shorties who thought, you know what, it's gonna go down, they get completely killed with the up move. The shorties who already placed earlier, the old ones who had this MTS here, they get taken out with a big target run towards this level, and the majority of them gets really taken out. This is a target run, yeah? So this is the original main target. Okay. You understand? Now, short-term traders who try to scalp in the range and get a good risk reward, no matter whether they bought or sold, or you know, whether they try to trade a little reversal or a pullback or a breakout, they all get taken out. Or, you know, they are in the washing machine, okay? They get hit by the washing machine. If think about it, if the smart money algos wouldn't do that, okay, it would be very easy to trade. All you would need to do is to use tight stops and to have a good risk reward ratio, and if you wouldn't get stopped out so much, you would trade profitably. Okay, but the reality is it's not possible. And remember, as a footnote here, the broker will also conduct stop hunting by manipulating the spread and will do a fake spread extension just to take your short-term stops. Okay, this is why you have to be very careful if you want to scalp. You have to be a sniper these days. You can't just place trades. And if you don't believe it, test it. Okay, make a bot and put tight stops, and you will exactly see what I mean. You see? So take a step back. The smart money reached all the aims. Okay. New dumb money gets loaded in this case the shorties, okay? Done. Stops got pulled closer, okay, on the upper original target. The longies were placed correctly. They get served with a counter move and this long 8-hour sideways market. So they are reduced. Their short-term stops also get taken. Any traders who try to scalp by buying or selling within the range, they can't reach a good risk-reward ratio or any systems. Systems get lured on the wrong side with fake outs, thinking that there's going to be a breakout. And eventually there's going to be a news announcement anyways, okay? If let's say the activity by the dumb money isn't that high, well, eventually we're going to have, let's say, US employment data, okay? And now the algos will just use the number to conduct what they wanted to do anyways, okay? Let's say this is euro dollar. Oh. And let's say that the unemployment is lower than expected, so it's good for the dollar. What do? They do a little head fake and then suddenly go back into the range. And then people argue, well, they priced in the better US data with the head fake. But the truth is, I don't want to let the shorties win. Don't worry, I will do a separate video on this kind of dynamics. Okay. Now let's say the US data is really bad for the US. It's higher unemployment than expected. It's 3% higher than expected. What do? Boom, they do an exaggerated move because I wanted to take the MTS anyways and they wanted to take out the shorties anyways, you see. But I will make a separate video on this topic because it's important in Forex. Because eventually you always have the numbers coming in, yeah. But all they do is they just conduct what they would have done anyways in a condensed manner, okay. But all the time they constantly do these things here, always. If the market goes sideways, flat, whatever, they always play these games here I'm showing you, okay. I'm exposing the manipulation games by the smart money algos and here also in the short term. So this is the logic of these smart money algos. You could argue that's their mindset of this artificial intelligence, okay? If you incorporate this into your own trading, you will do so much better. And of course, if you use the MK web, you can see that and react to that. So let's look at real life examples in the next step. Let's look at Euro pound, for example. Yeah. Here we have a very similar scenario like I just showed you, okay? The real life example from the MK web. We have the MTS above the price and what happens? They don't take it out. They do a multi-hour, in this case even a multi-session sideways market, a range, okay? They take the lower MTS, they take the STS. So, okay, you see what I mean? Okay, some shorties suddenly come in, boom, they go back up into the range. Look at that. You see on the historic position indicator, the shorties came in, so they got priced in. And what happens eventually? More shorties come in, so boom, they go for the target run. Okay, in this case, more shorties came in after, so they even extended the move. You understand? This is the time and range principle. Look at that. They played Pac-Man. They really used the complete range. They used the complete time by making an extended sideways market. And then they do the big move. Yeah. They played Pac-Man by going below the low, below the low, below the low, below the low, back into the range. Washing machine, below the low, target run. Okay? With the MK web, you are able to counter that. Okay? So what other ways you can trade this? You can say, and of course, let's start with a simple case. Look, they took the low, the shorties, but here some shorties come in. Some may buy here and say, you know what? Some shorties are here. I can already buy towards the MTS. I protect myself. And you can just hold it. Some people try to be even more precise, to wait for the news here, wait until the price reverses, some shorties came in and then trade. More advanced traders, they may even trade away from the target. That's psychologically difficult for beginners, so only do that if you have some experience, okay? They may say, you know what, I see the MTS, but there will be counter moves before the actual MTS run will occur, so I actually short away from the target. I place my stop here with a cushion above the MTS, and at some point I take profit, okay? Look, you can do it several times here. knowing that eventually there can be the target run, and sometimes you may get stopped out because the target run suddenly happens, but most of the time you can trade several times profitably until there are really significant shorties in the market and the long is left, and you can switch and expect the target run. Okay? So you could call this advanced range trading. This is not for beginners in general, but this is an hour chart, so this is doable, of course. Okay, but you have to be aware. What is the situation? Where is the main target? Yeah, what's happening with the dumb money? What's coming in next? What's already in the market? Okay, where are the short-term stops? And of course, you see back then there were short-term stops in the range. Boom, boom, boom. They take them. Okay. And there are many examples for that. I mean, this here is Australian dollar. Look at that, the same thing. Okay. Time and range principle. Again with an MTS above the price. They go flat, they go down, they go down. Then boom, boom, they take it. And then they completely collapse down, okay, against the dumb money longies. Okay. So here a beautiful post stop on trade as well. We have another example here from pound Aussie, I think. Okay, yeah. The same thing, yeah? Look at that. And here with multiple MTS. MTS below the price, they go flat, boom, they take it. They go up, another MTS, they go against the MTS and then take it. Okay, they define a range and eventually they do a big move because the shorties kept on selling and so on. Okay? So this is in a nutshell the time and range principle, okay? The algos play Pac-Man. The smart money algos will exploit the factors time and range to the maximum. They need to. Because remember, the goal, the objective is to make everyone on the dumb money side lose. You understand? Whether they bought, whether they sold, okay, whether they trade, whether they do scalping, whether they try to trade a breakout, okay, whether they try to trade some kind of reversal, okay, and they sell into the market. They need to price all these dumb money activities in. And then by doing that, and we will make a separate video at the end, where hopefully everything comes together and it clicks, but I can already point to that. By doing these games, they succeed in making all these dumb money traders lose, okay? That is the whole point in Forex. And you don't want to be part of the dumb money. You want to be part of the smart money. We will never be on par, at par with the smart money. So, but we are semi-smart money. Okay, that's the best you can do, and that's enough to trade profitably. But if you're not aware of the dynamics, eventually you get destroyed. And by the way, I want to emphasize, it doesn't matter whether you use a bot or you use some price action analysis, which is so popular these days, okay? They come with liquidity sweeps and all that stuff. You're still dumb money, because this is what you need to understand. The pattern of the price doesn't tell you anything consistently. That's why recently everything has quieted down in that department, because setups they have defined on the basis of charts have died. And the reason for that is that this is what matters, okay? The actual position stops in the market, not some silly pattern. That would be easy. I can have the exact same price pattern, but if here we have shorties, the price will go up. But if we then have longies, the price will go down, no matter what the previous old historic pattern or price looked like. Okay? Otherwise the game would be easy. Alright, I want to keep it short. I hope you like this. Please always be aware of the time and range principle. Take it as a base case assumption, okay? Your trading will improve so much by not thinking in terms of up or down. That is not what happens most of the time. That's not the base case. Okay? The time and range principle shows you that the base case is range. And eventually, after these things have been done, then it's up or down. But if you take the assumption of the time and range principle, especially if you trade lower time frames, your trading will improve significantly. Get yourself the MK web and you will do even better. All the best. Take care.